Let's take a look at a couple of names that are trending after hours. We got 4 stocks for you. Let's start off with Gap. We were looking at gains of just about 0.7%. Not a huge move here in extended trading. It's actually a bit surprising given the results that we just got from Gap. The company reporting a larger than expected drop in same-store sales. Revenue also missing expectations. Total comp sales declining 6%, which was worse than expected. All 4 brands for the company posting a decline in same-store sales from a year ago. They have the new CEO, Richard Dixon. He is going to be on the call this afternoon. Certainly has a tough couple of months ahead as he looks to right the retailer. But shares of Gap, again, moving. Let's take a look at Gap, not Dow. Shares of Gap up just about 25% over the last 3 months. Year to date, though, we're still looking at declines of about 15%. Moving on to Nordstrom, another reading here on the retail sector. Better than expected earnings, revenue, and same-store sales, yet we're still seeing declines. When we take a look at some of the numbers that we're getting, Rack was one of the bright spots, I guess you could call it that, in this report. The decline in sales wasn't as bad as what the street was anticipating. Rack posting a sales drop of just about 4.1% for the quarter. That's an improvement from an 11% drop the previous quarter. Year to date, Nordstrom barely in the green, up just about 4%. When you take a look at the movement over the last 3 months, pretty similar here on that performance. Lots of questions about what the future looks like for Nordstrom and where the company should focus as it tries to get more consumers through its stores. And Marvell Technologies, another read on AI and the excitement that we're seeing there. Certainly a lot was riding on this report. We're looking at losses of just about 3%. Now, the company's adjusted EPS beat the street's expectations. Net revenue also topped what the street was looking for at $1.34 billion, but it was a decline of about 12% year over year. Data center revenue was off 29% year over year. There's certainly been a lot of growing optimism within Marvell because of their AI exposure. Year to date, we're looking at gains of just about 54%. I'm rounding it out with Ulta, another reading on the consumer. Year-to-date drop of nearly 10%. After hours, though, we're looking at a gain of just about 2%. The company boosting its earnings forecast for the year as well as its comp sales forecast. They're expecting growth of 4.5% to 5.5%. So consumers are still spending a bit when it comes to beauty. Year-to-date, though, like I said, shares are still in the red.